Hi, I'm Tom Grafeo with Dove Investment Research and Management. I'm here with my partner,
Paul Avila.
Hey, Paul.
Hi, Tom.
We're looking at the new year here. 2017 is coming up very soon, and we're excited to present our first podcast. So this is a little bit of a maiden voyage for us.
Yes, it is.
So we'll figure this out, and please understand this is our first, but we have some good ideas for you today. What's the subject for today, Paul?
Today it would be money moves for 2017.
So 2017 is coming, and I think that it's safe to say that it's not exactly the 2017 that a lot of people were planning on.
I could verify that for sure. With this election, we were all pretty much surprised and excited at the same time.
I think excited for sure. I did have a couple clients that said, back a year ago or more that Trump was going to win. You were right, John, and others. So good for you guys. All right, so let's get into this, and this is our first one. So we'll go through, I think, about 4 or 5 things today. What do you think?
I think that would cover it.
All right, so the first thing that kind of jumps out as what to do for 2017 would be is let's review your personal goals and your vision for the year. Are you in alignment with what you want at the end? And what do you think about that, Paul?
I think that's an important place to start as we go forward into the new year. We want to reevaluate everything, and it's a lot better to start off with where we want to finish the year than make changes along the way.
Well, I think that's really an important point to say that to understand where you want to end, you have to, let's go back to Stephen Covey, right? Begin with the end in mind. So let's understand a good starting point, have a fair and good starting point, make sure that we put your goals in alignment and all that, and then get there and then set goals for the end. How does that sound?
That sounds great.
All right, we'll do that. So make sure that you have your goals written down. If you write down your goals, you're much more likely to succeed and have those goals happen. So together, if you're working with us, we'll make sure that those goals are written down for the year. All right, what's number 2 on the
Next
list?
area would be to identify your risks in a higher interest rate environment. This next year, we do expect rates to go up. The Federal Reserve and Janet Yellen have identified that most likely will occur a time or two, and it's time to assess our existing risk and see what we need to do.
Well, I think for sure Janet Yellen and everyone has signaled a better expectation for the economy in 2017, which is great news. We have very high hopes and expectations for the economy, and we're going to make that take appropriate actions for that. But with that, the first and biggest obligation for most people is their home. And so how would higher interest rates affect homes?
I believe most people have refinanced as rates have been low that could qualify. The issue is a lot of people are not on fixed rates, and when they are adjustable, they will be negatively affected as these rates increase over time and affects their bottom line, and their payment will be going up over the time.
For sure. So the first thing on the home loan side is make sure you take a look at it. We don't do home loans, but it's a big part of the components of what we're always trying to plan for retirement and different things. I kind of liken it to a little bit like a musical chairs thing. I think the music is ending with a low interest rate environment, and you got to be happy with the chair that you're sitting in. So to translate into the homes, if you want to make a change, now's a good time to make a change. Or if you want to have a long-term loan, lock in these rates today because they're more likely going up in the future. With higher interest rates also, there could be a bit of a slowdown in the real estate market, potentially.
Correct. The other area to look at, which we feel there's quite a bit of risk, would be bond holdings and bond portfolios. Over the last few years, clients have been really looking for higher yields, and so they've been looking at bonds that have higher durations, which makes them subject to loss of principal or potential loss of principal should these rates go up. What would you say the main concerns are, Tom, with an increasing interest rate?
Well, duration, as you point out, is an indication of risk, and the longer the duration, the higher the risk. So we're definitely looking at that in terms of how we are managing our portfolios here and what we're thinking about. And so I think looking at your overall portfolio, we're going to try and keep things as short as possible and still get some good returns on it. Our bond portfolios, for the most part, did pretty well last year. We're working on that. I guess the third thing to think about with higher interest rates would finally be is to consider if you have any outstanding auto loans, or if you're thinking about getting an auto in the next year or two, probably a good idea to get it now, sooner, at a lower interest rate. Mm-hmm. So many dealerships are offering 0.9 or 0.1 or blah, blah, blah. take a look at it before interest rates go up. That'll probably be one of the first things that will go away in the future. All right.
The next area would be, it's a good time to review life insurance for potential lower costs. One of the issues with life insurance companies is in this very, very low interest rate environment, the costs have been higher. It takes more money to earn a return, and so the result is a little higher premium. So we do expect those to go down.
Which will be exciting for a lot of clients. I mean, the most devastating thing that we have to deal with is someone passing away without life insurance. So it's going to be a big part of our reviews for 2017, making sure that everyone we talk to, where there is a need for insurance, that they have the insurance of some sort, even a term policy or anything. We can make those so easily available now. And with higher interest rates in the future, which we all expect, including the insurance companies, we expect these premiums to be lower and more affordable. So if you want a review, we'd be more than happy to do it for free. See, again, how it lines up with number one, which is your overall vision for the year, and make the best possible choices. If we can save you a couple $100, that'd be awesome. If we can't, it'll be very clear also.
Right, and rates have been historically low for life insurance, so it's a good time to review it, and we do expect them to be lower, so we're excited.
So number 4 on the list that we're thinking about today for you is with a better potential economy, that you review your retirement contributions. For those people that are still saving money, retirement contributions are an important factor to the long-term overall success. Well, if we're expecting a better 2017 and better returns throughout the year, you may want to consider putting your contributions in the beginning of the year and having that full year for the growth.
Exactly, especially for people that have savings. What else are you using the funds for? If you're not spending it, banks are using that money and returning a paltry less than 1%. Typically it's tenths of a percent, and you might as well get that money working for you and put it in the longer term asset classes that will dramatically improve your return.
So where you have control to be able to make contributions either early or complete control in like a defined benefit plan or other types of plans, you may seriously want to think about putting all that contributions in at the beginning of the year instead of waiting till the end of the year. And we can work with you on that if you have any questions, and we have a great team that we can work with to make sure that happens for you.
And one last note is, in addition to the higher earnings, is getting that tax deduction.
Of course.
Making that work for you.
Which is a great incentive. And then finally, how do we bring it all together?
I think we need to just look at a review for the year and reassess where you are, where you want to go, and take necessary steps to implement a plan that works in your best interest.
I think that's right. And one of the great tools that we offer to our clients is a thing called eMoney, EMX. I think we're even working on a great fancy new name for it. But the bottom line is, it's a really unique tool that brings together all your different aspects of your financial life. We put together a goal with it, and then through that we are able to set goals and then see how we're attaining those goals in your life. And then you can see on the dashboard every day how we're moving towards that, or if we're not, we'll make adjustments that we will. So our technology is really unique and really powerful, and something that we add to our client relationship because we think it's so important. So please make sure you're using that technology, or that you're certainly talking to us about it, because we think it's just so powerful.
One more piece of technology we highly encourage you to utilize is risk assessment software we have, where we can actually look at where your portfolio is right now and look at what risk you're facing. Should interest rates go up, should the economy pull back, whatever the scenario is, and actually base it on your personal risk tolerance to make sure that your portfolio is in alignment with your personal risk.
Well, I think that's spot on, and actually if you, here on our website on doveinvestments.com, you can actually take the risk assessment tool. If you go to the top banner and it says something like about your risk, or it points out the risk thing, make sure you take a look at that. Take that first couple questions. It can be as simple as 5 questions, as long as 15 questions. Make sure you take that risk questionnaire. That'll be a great way to also have a conversation with you about risks, goals, returns, and then the whole risk environment around that. So please make sure you do that.
Yes, and we're excited with this new year coming forward. Please visit our website, and we look forward to talking with you.
Have a great 2017. We're looking forward to working with you.